Hi everyone, I'm Mani, the CEO and founder of Valor. In this video, we're going to talk about two types of solar asset purchases: flip partnerships and sales leasebacks. By the end, you'll understand what each structure is, their benefits and risks, and some qualifications and limitations that people should take into account when buying solar projects. If you still haven't watched our previous video on the topic, I first recommend you to do so. Let's now get started. A flip partnership allows investors to receive a greater share of the tax credits and depreciation relative to their investment. The partnership is structured with three partners: a sponsor, who is responsible for developing and operating the solar energy project; an investor, who funds the project; and a bank that offers debt financing that increases the total investment in the project. These structures work by allocating typically 99% of the tax credits and depreciation to the investor partner in the early years of the project. In return, the sponsor partner receives the majority of the cash flow from the project over its lifetime. Flip partnerships are a particularly good fit for individuals and businesses aiming to offset taxes from more than $500,000 in annual income. So what are the financial benefits and risks of flip partnerships? As tax benefits, the investor enjoys the majority of the tax credits and depreciation and can earn more in tax savings than what they invest. Per dollar invested, you can get somewhere between $1.5 and $1.7 in tax savings, roughly $1.3 in the first year of the solar project. Another benefit is that the developer and investor share the project risks, reducing the exposure for each party. What are the risks? One risk is debt, although debt partners limit the debt to what the projects can cover, and solar systems revenues are fairly predictable based on historical performance. Another risk is related to liability, but in case the debt can't be covered, the risk for the investor is extremely low because the bank would pursue the revenues from the project first, the solar system assets, such as panels afterwards, the developer, and finally the investor's solar LLC. Let's now jump into sales leasebacks. A sale leaseback is a financial arrangement in which a solar project developer sells a solar system to an investor and then leases it back from the investor. This way, the investor benefits from tax incentives and a steady income stream from the project with minimal overhead, and the developer operates, maintains the system, and is able to take the risk and make a profit based on the spread between the price they sell the electricity and what they pay the investor. Solar sale leasebacks are a good fit for individuals who want cash flow and/or have smaller tax write-off needs. And what are the financial benefits of sales leasebacks? Firstly, tax incentives. The investor can claim federal tax credits and accelerated depreciation, which can significantly offset the system's investment cost. On the other hand, the investor will receive a stable income as the developer makes regular lease payments. There is a credit risk associated with sales leasebacks. If the developer defaults on the lease payments, the investor may have to find another operator. Benefits from solar projects are clear, but there are a couple of qualifications and limitations to take into account. To qualify for solar projects benefits, depending on your situation, you will have to be active. What does this mean? If you have active business income, ordinary income, or RSUs, you will need to set up an LLC focused on running your solar business, and you will also need to actively participate with annual hours in your solar business. This is a bit tougher for many investors, but a couple of features make the requirement less onerous. Activities like viewing site work and attending relevant conferences qualify for this hours requirement. Participation by either spouse is also counted towards satisfying the annual hours. On the other hand, if you have passive business income and want to invest in a solar project, you will also need to set up an LLC focused on solar projects, but you don't need to actively participate in it. All right, that wraps it up. I really hope you found this video useful. If you have any questions or comments, please leave them below.
Now, a quick word about Valor. We've built a platform to give everyone access to the tax planning tools of billionaires like Facebook founder Mark Zuckerberg and others. We make it simple and seamless to pick the best strategy, set up and administer these structures at a fraction of the cost of competitors. I really hope you found this video useful. If you still have any questions, please visit our website at valur.io where you can read more content on these subjects, play with our online calculator to discover your potential financial gains, or schedule a call with us.